In this lecture, we want to discuss the central banks, the Federal Reserve, the ECB, and the whole money printing business. As we've noticed, since 2008, since the financial crisis, the Federal Reserve and central banks are playing a very, very large role in world markets, in world financial markets, stock markets, as well as bond markets. So the financial crisis, at least in the US, resulted in huge bailouts of these financial institutions, AIG, Goldman Sachs, and basically every other financial institution. Over $1 trillion to $2 trillion was spent by the federal government in these bailouts. Now, who bears the cost of these bailouts? The cost of these bailouts are borne by the rest of the nation, by the whole nation, because by moving these bad assets or bad trades from the books of these banks over to the federal government. Now the federal government is what? Federal government is composed of every citizen in the nation. So that whole entire $2 trillion has to be borne by all citizens. So this is what they mean by capitalism in good times and socialism in bad times. So this is not a very good outcome for the rest of the citizens when governments bail out large institutions with large amounts of money, because ultimately the cost of those bailouts then are borne by the rest of the citizens. So now the Federal Reserve has kept interest rates low for almost 8 or 9 years, and low interest rates always means money is cheap. But that really hasn't resulted in a lot of inflation because banks are still very careful to lend money. But cheap money in general leads to asset bubbles. So, cheap money has been around for a long time, and it remains to be seen how this plays out. One area where there definitely seems to be a bubble is the whole investments into the shale oil infrastructure in many states in the US, including North Dakota and Oklahoma and all of those states. A lot of money has been pumped into those assets there. And of course, with oil crashing, those assets could get into a lot of trouble in the future. Now, the US can afford to print money because of several reasons. One is it's the global reserve currency. So all international trade in many of these commodities, gold, oil, everything takes place in US dollars. And so all countries have a reserve in US dollars, because if they want to go into the international market and buy any of these commodities, they have to pay in US dollars. So the US can afford to print money because, one, it's the global reserve currency. Two, the world puts its faith in the US government. So we live in a world which is very US centric still. And the world is very heavily invested in the US, whether it's the US financial markets or whether it's the US physical market. So now we're talking real estate, all kinds of infrastructure. Companies have invested a lot of money here. Big companies like Toyota and BMW, they produce cars in America. So you can see the world is very heavily invested into the US. And so it's not in their interest to see the US go down and default on its debt obligations. However, the US debt is just continuing to rise, and we are at $19 trillion today. In 2008, it was close to $10 trillion. Now it's $19 trillion, and there is no sign that this debt is coming down. The rate of increase might slow down, but it is an increase nonetheless. And so you have to ask, how long can this last? Can this last forever? Now, the US economy itself is $19-20 trillion. So as debt to GDP ratio is 1, and so that's a pretty high number. Anything over 0.8, 0.9 starts getting into the high range. And so you have to ask, how long can this last? Can the US continue to issue its bonds? And it's not just a matter of issuing bonds. People have to be willing to buy it. And so now you may have heard that China has $3 trillion in its reserves. Now, where is all these dollars coming from? That's because China has a trade surplus with the US. So every month and every year, we send over $300 billion to China because we buy their goods. And when we buy the goods, those companies get dollars and they take the dollars back home. And so now the Chinese government has to invest these dollars somewhere. They could, of course, change it for euros, but is that a good investment? They could change it to Japanese yen, but is that a good investment? Or they could invest in the US bonds itself and pick up the 3 or 4% interest that those bonds give. And this is what has been happening is all the major countries in the world, whether it's China, whether it's Japan, Saudi Arabia, UK, Germany, all these countries, they invest US dollars into the bond market. So everybody is heavily invested in the US market, but the question is, can this last forever? And when will it stop? It will stop when the faith that all these countries have in the US government is gone. So which means at some point, if the US government shows no sign of reducing this debt levels, and in fact, if it starts getting worse and exponentially worse, that's when this faith will get eroded, and that can cause a major crash in the bond markets. And so once the bond markets crash, this relationship between bond markets and stock markets is not going to hold. If we see a major crash in the bond markets and a long-term crash, that is going to impact the stock market negatively. It doesn't mean that money is going to go from the bond market to the stock market. That's because the bond market is so important in running the country and the rest of its trade obligations around the world, especially for a government like the US government. Any big crash, long-term sustained crash in the US bond markets is going to impact negatively on the rest of the world. And so everybody's investments are going to get hurt, and it's going to be crash to the bottom. That is also one reason why the rest of the world continues to buy US bonds, because they're all so heavily invested in the US, they don't want to see their investments go down. It's sort of like a vicious circle, and what that ends up doing is it makes the US government somewhat unaccountable, and we can see that from the politics in Washington. The Congress just simply doesn't want to tackle the problem of debt and reducing its debt. All the government welfare programs as a percentage of government spending is very, very high right now. And so we continue to spend on defense, we continue to spend on entitlements, we continue to spend on various other things, a lot of wastage in the US government, and we raise the money from the bond markets, and the rest of the world continues to invest because they still have faith in the US government that at some point the US government will get its act together. So although right now that issue of crisis is not there, if the numbers for the US government starts getting significantly worse, this could impact very negatively on the rest of the world. And in fact, that would create a deep depression in the entire world if, for say, the US bond markets crash. Because what that means is if the US bond markets crash, then that means the US dollar is also crashing, because everybody would be wanting to liquidate their bonds and get paid in US dollars and immediately convert it to some other currency and take it out of the country. And so which would result in the US dollar also going down. And basically it would be the end of the supremacy that America has in the world today. Not very dissimilar from what the UK faced just about 100 years ago, because until 1920, until the First World War, and even until the Second World War, the British pound was the global reserve currency. But after the Second World War, everything changed. And from then, it's all been the US dollar and the US government. So that's just a bit of background. There is perils in the bond market. And unfortunately, if the bond markets crash, then there is no other government or any other agency that can really bail it out. The IMF could be one possibility, but then the IMF also has to be funded by its member countries. So it's very, very difficult to manage the situation if the US bond markets crash. And so that is really the big peril that we are facing in the future, unless the US government really gets its act together, cuts spending and cuts wastage, and the economy grows and their tax base grows. All of that has to happen, and we are still waiting for those kinds of things. None of that has happened yet, and so this danger will last at least for the near future, near to medium future. So hopefully this has given you a better understanding of where we stand in the world and the whole world of money printing and central banks. Central banks have no doubt intervened in the markets, but how long can they intervene? Even that has a limit, and so we are at a very interesting and perhaps somewhat dangerous point right now, because everybody has loaded up on debt and the whole issue of faith. Okay, so as long as people have faith, this will continue. But the moment investors lose faith, that's when the danger starts. Thanks.